Everybody, it's Omar. It is December 7th, 2017, and I wanted to make a video talking about how to use Fibonacci retracements in day trading. So for a long time I've been trying to figure out how these Fibonacci's work on day trading. And you can go to YouTube and you can find a million videos about how to use Fibonacci's, but I never really understood how to set them properly for day trading. And when you kind of go look up Fibonacci retracements for day trading, there's really no videos that kind of teach you how to do it. So I've been kind of just doing a lot of research, talking to people, and just kind of playing with charts and kind of figuring it out. And let me tell you something, Fibonacci retracements are fantastic. What I like about Fibonacci retracements as opposed to any of the other indicators outside of VWAP is that all indicators pretty much are lagging indicators. Like they're not a reflection of what's happening at that exact moment. But Fibonacci retracements, what's great about them is they're not about like general indicators. They're really based off support and resistance. And Investopedia.com you can get a ton of information about Fibonacci retracements. And basically, in a nutshell, in technical analysis, Fibonacci retracements created by taking two extreme points, usually a major peak and through on a stock chart, and dividing the vertical distance by the key Fibonacci ratios of 23.6, 38.2, 50, 61, and 100. And there are other actual numbers, and there's things called extensions and all this other shit that can get really complicated. But I'm gonna try to explain this as simply as possible. All right, so in a nutshell, right, Fibonacci retracements are support and resistance lines based off these ratios. Okay, and if you want more detail, you can actually click the link to Investopedia, and it actually has a video kind of explaining how it all works in a simple nutshell. And there's a million YouTube videos that go into a lot of detail about this. All right, I'm not going to spend my time on that. Now, I'm in thinkorswim. Thinkorswim, you don't need, you can open a thinkorswim account with no money. All right, you can do all this for free. Okay, watch my videos. Watchotrade is my YouTube handle, and I have a million videos on all these things. Now, what you're looking at right now is I have this set up. So I have 4 charts here on 2-day time frames with different minutes. So if you notice, this is the 2-day 1-minute chart, the 2-day 5-minute chart, the 2-day 15-minute chart, and the daily chart for a year. Fibonacci is fantastic in the sense that for swing trading it can be really good, for day trading it can be exceptional. And what you see here, these are the actual ratios. Now, if you noticed in that thing that I post up, it talks about the 23, the 38, the 50, the 61. There's actually a 78 and 100. But the holy grails of support and resistance points in Fibonacci is the 38, 50, and the 61, which I think people think to be like the holy grail. All right. Now, I have this thinkorswim script that actually sets them automatically for you, the 38 and the 50 and the 61. And basically the way this works in day trading is this. You want to step 1, you want to have a 2-day chart open. And what you want to do is you set the Fibonacci for a trend, either the low to high point or the high to low point. Meaning, if we look at the 2-day chart, I just grabbed this simple GLBR, right? We look at the last 2 days. I mean, 2 days ago, this was trading at 32 cents, right? And it hit a low yesterday of 25 cents. So what you do with Fibonacci is it's taking the extreme low point to the highest point. So you take the low over the last 2 days to the high over the last 2 days. Or if the trend was a reversal, let's say the stock started at 88 cents and it crashed all the way down to 25 cents, then you would take the high of that trend to the low of the trend. All right, so this is setting it up automatically. Okay, you also can set it manually on thinkorswim. So the way you would do that is, if I went to drawings and I go to drawing tools, you're gonna see an option there for Fibonacci retracements. If I click it, all I'm doing is taking the low, so 25 cents, right? And it goes to the high, 88 cents. Now, when I set it, sometimes, you know, I'm not going to set it. Now, the thing about Fibonacci, it has to be set to the exact low and high in order for it to be accurate. So when you set it, and let's say you have a hard time like getting the numbers, all you literally do is once you just set it at any number, right click on it, go to edit properties, and then you're gonna have the value, the low and high. So here I'm gonna put 25, right? And here I'm gonna put 88 because that's the high. And now you're gonna see all the ratios. See the 23, the 38, the 50, the 61, the 78, the 1, and then these, once it goes over the high, these are called extensions, and which I'm not gonna really get into. Now I hit OK, and now you notice you don't see the white lines because they match exactly. All right, they match exactly the low and the high. So that just to prove to you that it's automated. Now when I post a video, I'll post a script. So I have a script that sets it for you, so you don't have to set it manually. But basically, I'm just showing you how to do it manually if you don't want to use the script. It's really up to you. So if I go to here and I go to edit, I think it's edit sources, it'll pull up this is the script. I'm gonna copy and paste this onto the YouTube page so that you can then copy it and set it for yourself. All right. Now, the way this works is pretty remarkable. So again, the holy grails are the 61, 50, and 38. Okay, and if you notice, this stock starts moving at 25 cents. And what you want to do is you want to look at each Fibonacci area as a support, either a support or a resistance point. Now, if you're going from the low to the high, each area is a resistance point. And basically, when it breaks above a resistance point, that can be, depending on the, you know, the chart and the technicals, that can be an entry point for you to take a crack at it. So look right here, this is the 78. Now I don't even use the 78, to be honest with you. I don't use the 78%. I really like to look for stocks. Like if I'm looking at a stock that's like at a low and I'm looking for it to run, I like to see like if it's gonna get rejected by the 61 percentile so that I can short it off that. But if it goes above it and it looks good, I'll take a long on it. Now, if you use the thinkorswim ones, it'll automatically set these. But if you don't want them, you can right click, go to edit properties, and you can unselect the ones you don't want to use. So like if you wanted to match what I have on the automatic fibs, I can literally deselect the ones I don't want to show, and they would automatically remove themselves. It's very simple. Now, if I'm looking at this, look, it comes up, it gets rejected by the 78 initially, right? And it pulls back, and then it starts kind of consolidating sideways, and you can see how it starts running up, right? And once it breaks the 78, that's an entry point, because your hope is once it breaks above this, you're gonna ride this to the next Fibonacci retracement area to see if it's gonna hold and bounce off it, or is it gonna continue up. Now, if you notice, right, it breaks through the 78, it breaks through the 61, and all these are entries. Now, what I would do here too is I'm using, oops, let me get rid of that. What I like to do is, even though I'm using the Fibonacci's, I still like to use my trend line. So, you know, here if I see a trend, I would still put a trend line to, you know, give me some sense of comfort to see that it's riding up. Now, you notice you're getting the strong volume here, and it just broke through that, and it also broke through the 61. So what I like to see is I like to see the candle break above the line and hold before I would take an entry. And you see it breaks above the 61% trend line, which is at that 49 cent mark, and it continues up. It gets to the 50. All right. So now this is telling me once it breaks above that 61, you know, it breaks above the 50. Once it breaks above the 23, you know that it's really, really bullish. But look what happens, guys. It gets to the 23 percentile, right, which is at 63 cents. And look what happens. It gets rejected by it. Look, it can't break through. It acts as a resistance barrier. That's no accident, guys. I'm telling you, Fibonacci is pretty remarkable. You can see how it gets rejected here. Now, once it gets rejected here and you see it breaks that trend line, you could take a short. So right in here, you could have took it short and you could have took it back down and see, all right, is it gonna pass through the 50% trend line? Is it gonna break, Fibonacci retracement? Is it gonna, how far is it gonna retrace back? And look what happens, guys. It retraces back to that 61. Actually, it breaks a little below. It actually broke back to VWAP. And then look, it starts consolidating at that 61% line. And if you see, look, it dips below it. It kind of touches it, but it doesn't hold it. And look, now the 61% retracement is now a resistance barrier, and you could have took another short here, you know, and it kind of gapped back down, and then it consolidated here at that 78% trend line. Look, this is just things that I marked on the, you know, I just took the low and the high, but look how they're acting like support and resistance line. So this is a support line exactly at the 78 cent mark. And then look, it kind of has this U-shaped pattern, which means that it's gonna start grinding. And look, it just took off. It broke even past the 38 percentile, came back, retraced to VWAP, and continued up. You know, and each area is, you can act as a support and resistance line. Look, like it breaks above the 23, kind of falls back. Once it broke from the low, once it breaks that 38, that you're in a bullish trend now. You're in an upward trend, and you know, obviously, you're gonna look at the other time frames to give you, and they give you an indication of like, you know, you think a trend is that the stock is moving on an upward trend. Like, so let me just remove this for a second. Like, if you look here, right, on the 15-minute time frame that I see here, even if you didn't have the other, you know, all the Fibonacci's, you see there's a flag pattern here, and what you should be having is a trend line. So once you see the stock gap down and it breaks that trend, you can see that it flagged. Look, and then here on the 15-minute, you see another flag. So it pulls back and then it continues up. And look, it bounced nearly right off that 61% retracement on the 15-minute and just continued upward. And look, you can see the clear flag patterns here. That's why you continue to get this run, these moves up. All right, I just picked a general stock just to kind of show you. And I'm kind of winging this. I didn't really think this through. But let's look at a couple of charts just so you can see. And I had these already sort of mapped out. All right. Let me remove the drawings here so you can see. All right. Remove all drawings. Oops. Remove drawings. Sorry. Why is it not letting me? Just remove drawing. Okay, here's another one, right? Here's another. So remember, two-day, you're looking at the 2-day chart and you want to see what's the highest point and the lowest point. Now your question, you may be thinking, so Walmart, what if I set this and then it breaks above the 1538 and I did it manually? Yeah, if you did it manually, that means you're gonna have to set it to the newest highest point or the newest lowest point. Let's say it broke below 1404, then you would have to set it, unless you're using these automatic fibs. All right, so watch. If let me go to my fibs, right? So now I'm going, I showed you a low to a high. Now let me show you a high to a low. All right, so here's 1538. All right, and it's okay if it's off because I'm gonna fix it, right? So the low is 1404, the high is 1538. So I just right click on this, edit properties, 1538. All right, now, so this stock was gapping up at its high, and this is the low, right? So let's look at today, okay? And that's why it's cool. You can build a watch list, and you can take the high and the low and make this in advance of the actual trading day. So if we look at this, right, the stock gapped up after hours, and this is pre-market. And then the market opens. Now let's look at this, and you can look at it on the 15-minute and on the 5-minute over here. Let me zoom in a little bit so we can see it a little better, right? So right here at this point, it's at the 23% retracement level, right? I tell you that the three holy grails are the 38, 50, and 61. And if you notice on thinkorswim, I didn't change, the colors are automatically set this way because thinkorswim recognizes that these three retracement areas tend to be, okay, the ones that people pay the most attention to. All right, so if the market opens, look what happens. It gaps up, it forms this flag pattern. You notice here, oops, let me do that. So if you notice here, right here on the 1-minute time frame, it forms this flag pattern. So, you know, it pulls back to that. This is the 13 EMA, and it keeps going. Now, once it breaks above the 38 and it's holding strong, you could take an entry here and take it long. Okay, if you see the volume there and it's moving, and it moves up, it gets to the 50, it comes up, it breaks above the 50 momentarily, and then it kind of gaps down below the 50, and you know, it's kind of holding strong above VWAP. Now look what happens, just to show you how accurate fibs can be, right? So you have this U-shaped pattern, it blows through this in this 1 minute candle. It goes from 1481 to 1517. It kind of comes back crashing down, and look over the next couple of minutes, look what happens. The stock, once it breaks above that 1 minute, broke above the 78, it retraces right to the 50. And look at that, 1471 is the low, which is the 50% retracement. Look what happens. Now that 50% retracement holds, acts as support, and you see the U-shaped pattern, and look at this, you got the next move up, you got a flag pattern here, so you know you're gonna get another push, and look, it breaks above it. Look what happened, it now retraces right back to that 61 level, exactly at the 61 level. It got to a low of, and actually for a second here dipped below the 1487 here. It hit a low of 1488, and it continued up, you know, and you can take a long here, you know, using that as your entry, you know. And look, the stock continued all the way up. It got up to as high as 1508, and look, it got rejected at that 78 mark. Look what happened. So it's kind of gapping up, but it doesn't want to break that 1509, and look, you could have took a short here, and it came all the way back down, and look what happens. It touched the 61% level, gapped back up, and look what happened. It kind of held this, and then it, for a second, it broke 1509, and it just continued to run. Now, just so you know, and I'm looking at this on the 1 minute time frame, but people make trades based on that. Now, what you see a lot of is like a stock that spikes, it goes up crazy high a few points, and then it retraces back to that either 61, 50% or 61% retracement, and then continues upward. I'm gonna try to find some stocks like that. But if you notice here, look on the 5 minute time frame. Let me get rid of clear drawing set. Look what happens here. This is the 30. This is the this is the automatic fib that I'm using, right? The 38, the 50, and the 61. If you notice, look what happens. It retraces on the 5 minute. You can see it there too clearly. Look at that. Touches it, flags back down, right back to it, and then continues upward. Look at that. Pulls right back, okay, to that 61%, and then continues up higher. Look at that, double bottomed here almost, and it continues upward. So you could take trades, day trades, on these based on these fib levels. I mean, they're so deadly accurate. You see that they're fib lines. They're not just general support and resistance lines. They are support and resistance lines, but not the ones like I'm looking at the stock here and I'm putting a trend line here, like that in that context is what I'm trying to say. All right, now you can apply this to any price stock too. See, I showed you a dog shit price stock that was in 20 cents that went up to 70 cents. Now let's look at a stock like Apple. Let's see what it did today. Let's see how the fibs played on Apple. Okay, and I had this, I've been playing a lot with this, so that's why I see a lot of this. So let's remove all the drawings today. Clear all drawings. Yes. All right. So here, this was over the last 2 days. You see how it's playing it? It's taking the high, right? The highest point. So this is the trend. Highest point to the lowest point. Now you're gonna say, well, Omar, why am I not starting from here and going to here? And theoretically, you could. You're not saying you can't, but right? Remember what I said. It's the two most extreme points over the last 2 days. That's when this tends to be the most accurate. So you got to see where the highest point to the lowest point was, or the lowest point to the highest point, depending on the trend. So that's where I got these numbers from. And if you notice, and if you want, I can, just to show you, just in the event that you want to set your own fibs and you don't want to use the automated one, just to show you how it works again. Okay, so I'm gonna go back to my retracements. All right, I'll fix this. It's 171.52, 166.46. So I'm gonna fix this. Right, edit 171.52. Okay, and the low is 166.46, and I hit OK, and look, Now you don't even see the white lines because now that's the logic, right? So this had this nice little run, right? And the market opens today, and let's see if the fibs play any major role here. Let me zoom out a little bit so we can see 5 day. Oops, that's 2 day, 5 minute. All right, here's the market open here, and let's see, the market opens, right? This is the low, so this is the 0, this is the 23%, and you know, you see it kind of starts gapping up. It forms this little flag. Let me remember, flags mean you're gonna get a leg up generally. See, flag pattern right here, and you get the next push up. So look what happens here, right? Just to show you how accurate this is, right? So 167.65 is the 23% retracement, which is, you know, again, the ones that for me matter the most are these three. But using all, just because for all things being equal, look at this is the 167.65, right? Look at the low of this 167.65 was the low. Look at that. All right, and the high was 168.59. So if you took an entry on this based because you saw the flag and you had a limit order already set at that number, you know, you have 100 shares, you could have made a quick $100 in 1 minute. You know what I mean? So, you know, it gaps up, and you know, in that 1 minute it pulls back somewhat, and you know, kind of like, you know, it kind of the next retracement level was 38.2. It at 168.39, it kind of acts as resistance at this point. It pulls back a little bit, but if you notice, right, the trend is your friend, right? And if you notice, you know, it starts going on this trend. So when I see a stock go, I always use a trend line just to be safe, you know. And look, it breaks above that 168.39 in the next 2 minutes, right? So if we look, the low here was 168.37. The close was 168.34. So in that minute, it gapped above it, and look, it at that 50. Look, it gets rejected at the 50. The 50 is 168.99. This stock at the height, it hit 168.97. So 2 cents below it, and then it got rejected, and then it starts pulling back. Now in that rejection, you could have took a short, and look, this thing came back all the way down to VWAP, all to 167. So you could have took a short right here, you know. And I do that a lot. I've been doing it a lot, where if I see a stock getting rejected at the 38, 50, and 61, I'm taking shorts on it, and you know, just riding it down and using that next fib level as a potential exit. You know, depends. You know, I'm watching the price action. So you know, look, it came all the way out of VWAP, and then, you know, it kind of breaks above the 30, and look what happens. It continues all the way up. It gets back to that 61, which to me is the holy grail, and it didn't you know, try to touch it, but it got up, and then it kind of pulled back, and you could have took another short there, risking that 61% level high. And there's traders that's all they do. They don't look at level 2. They don't look at time and sales. They just look at volume, and they just play off these lines, and they make a shitload of money. Okay, even Tim Sykes, who always talks about there's no, you know, that indicators are not worth anything. In his, I think his penny stock framework DVD, he acknowledges like the power of Fibonacci, even in them. Like he even like had a moment of sincerity and said, yeah, hey, these things are pretty powerful. And if you notice, look, you know, it starts gathering some steam, and if you notice, look, it breaks above the 50. It tops out here. You got this double top right here at this point, you know, so you got a double top. So you know you're going to get a bit of a pullback. And look, it pulls back, and look what happens. It holds the 50. So when you see the momentum going up, and I'm just using the 1 minute time frame again, you always want to use all the time frames, you know, to get the you know, all the different time frames to give you a better general sense of what a stock is going to do, you know. But look, you see it kind of hugs this, and then it gaps up. You know, you see that momentum, and you can take it up, and then it breaks above the 61 to tell you that it's the start of an upward trend. When it goes above that at this point, that's telling you that there's a new bullish trend happening. And you notice here, you know, it dips below and above it, but my point is that, you know, you can see these are good entry points. Like look, right here it gapped up, and it pulled back on a flag pattern and held that 61% retracement line. it was 169.59. This hit a low of 169.58, and then it just ran up all the way to 170. That's almost 2 points. It doesn't seem like a lot, but that's almost 2 points. And that could have been your entry right in this candle when you see all that strength coming in, that volume. You know, I'm just trying to show you, and you know, and this would have been an easy entry for me because I'm looking at that flag. You see how you get that flag pattern? You know you're gonna get another push. You know, so you know that's just to tell you that, you know, that you can use these as great indicators. You know, and you know, it kind of hovered up and down, but look at this. It retraced back to 50, held to 50, and then came back up again. I'm just trying to show you how powerful fibs are. You know, fibs are extraordinarily powerful. Look, it got up to it retraced back right to that 61. It couldn't really hold it, and then you could take a short right here. It's a clear entry for a short. You know, and you know, and the rest of the day it kind of just ran. And you know, it broke above it again, and then you know, you could have shorted this back down. But I'm just trying to show you how powerful fibs are. So again, you can use them in both directions. Let's look at today. Let's look at some other stocks. Let's see what else moved. Let's see some stuff with some volume. Let's see. As a matter of fact, let me look at some of the stocks Alright, Cure was a stock. now just so you know, guys, that with Fibonacci, remember there's no guarantees in any of this. It's not an exact science, you know, but it's an estimate, and it can be very helpful. Let me look. I don't want. Let's see. I'm trying to find. All right, let's look at DPW. So DPW is a stock, right, that over the last 2 days, it had, remember, you take the highest point, the lowest point. So let's do this again. Now, remember, this is automated. I have these 3 automated, but I'm just continuing to show you how you set them manually, just so that it clicks, it registers with you how you remember. You're taking the highest point, you know, the trend. So either the trend that started from the low to the high, or the high to the low, wherever the trend is, right? So I'm taking the high and I'm going to the low, and pre-market and post-market are included. All right, so you got to look at that as well. So I'll do 510 to make it accurate. 263. Hit OK. All right, so we're looking at this, right? So this was yesterday post-market on the 6th, and you see kind of got up to 23, got rejected, and look at this. This is the post-market yesterday. Look what's happening here. The 23% area is acting as a major area of resistance. Look what happened. It kind of tap, and then you could have took a short. Now this is after hours, but I'm just trying to show you how this works. And then the next morning, which was the 7th, all these people who shorted and held here, they saw that, you know, they probably were covering into this. That's why I had this crazy spike. And look what happens. The stock starts ripping, you know, pre-market, but not a lot of volume. This is very minimal volume. But if you zoom in here and you look at it, you know, look at this. It touches it, but it's on this, you know, upward momentum. So, you know, it's an ascending triangle breakout. And if you notice here, it retraces to the 50, and then it gets to that 78. Can't really break it for long, and it kind of rejects it. And then you got this sort of wash. Now look what happens. It gets to the 78. It consolidates all the way back to the 32, and look what happens. It has this bounce off the 32. Now it doesn't seem like much, but it went from 354 to the 387. Look, and it got to a high of 384 before it pulled back. And look, it bounced off that 38 again. And sorry guys, my dogs. And look, it kind of bounced off these 38% level fibs. You see how they're acting as support? And, you know, and then it breaks below. Now, this is all pre-market. I'm just, you know, it's kind of hard to explain this, and I probably should have thought this out more. But I'm just trying to explain to you how these levels can act as support and resistance. So the market opens, and you know, for a second dips below it. It gaps up, but it can't hold that 50. And look what happens. It pulls back, you know, gaps up, forms a higher low. But look what happens. It literally gets back to a low of 356. It's incredible. Look at that. It touches the 356 level. It retraced back to that 38 level. And which is telling me if it holds, that means it's going to begin an upward trend. And look, it gaps up again from that 357 level. It gets to a high, kind of gaps up, pulls back again. It gets to a low of 360. It's still in that upward trend. And it got to up to 380. So let's assume you took a trade here off that 357 level, you know, and you like, hey, you're looking to get out at the next Fibonacci retracement area of 50%, 387. Now that's, you know, it doesn't seem like much, but that's 30 cents. Now that could be a lot or little. So 1,000 shares, $300. 2,000 shares, $600. 3,000 shares, $900. 4,000 shares, you know, $1,200. So, you know, it depends on your account size and all that. But, you know, 30 cents could be a lot or a little. You know, it really just depends. But look, it kind of goes up. Now, me personally, I like to see a clear hold of a level before I jump in. Like right here, I would have been a little nervous because, you know, I like to see the candle above the line, you know. And, you know, here it kind of goes back up and it doesn't get quite back to that 61% area. You know, it kind of pulls back and it's holding now. This is VWAP. It dipped below that 50%, but you see it's kind of consolidating around VWAP at this 50% level. And, you know, for a second here, gaps up and, you know, it kind of goes back. Now, once I see it break below that, clearly I take a short. And look, it bounced right back to that 32, bounced right off the 32, bounced back. It's like double bottomed here. And, you know, it kind of gapped back up again. So, you know, you could have took a quick scalp here. It went from 350 to 380. You know, but the thing that I want you to take away from this is that look at how it's acting as a support level. It's incredible, you know, and you can take trades or go long and short based off these support levels. So, you know, if I see it consolidating sideways all day and I see this right here and it breaks below, right here I'm taking a short. Right here I see weakness, I see some selling pressure, and me personally, I'm just risking off the 357 level. Maybe I'll risk 360 or whatever, the rate 366 here, and I'm just shorting this. And look, you could have made in that quick breakdown here, if I would have gotten right here, you know, and let's say I got executed here at 355, in that next 1 minute candle, this thing got to 324. All right, and you could have took a short based on that. And look what happens. It did quick, you know, for momentarily broke below 23, gets back above 23 and holds. It holds. You see? Look at that. Look at that. And then, you know, once you see that break, you could take another short based on that. All right. And then look, it kind of gapped up and then you got some volume and it's up again. So, you know, and then this is after hours right now, just running sideways all day. So I'm just trying to show you that. I'm trying to find a couple of stocks. Let's see. And I hope this makes sense. You know, I hope this is making sense. Like a stock like this, I love like shorts. Like this is a good example. So here's a stock that, you know, was up at $3 gold. Was up at 2 days ago or yesterday. Was up at 347. It hit a low of 120, and then today, you know, it kind of started moving. Now, what I like to do is I like to see if it's gonna hold these areas. If not, I like to short them back down, because if it's a dog shit company, it's up on some bullshit news, and you're getting shorts covering, you know, you can see here that it gaps up. It breaks above that. It breaks above the 60. The 38 right here, and you know, so you see it. Now I'm also let's get remove I'm sorry guys, and I hope this is not boring. I hope you find this informative. It's Fibonacci's somewhat hard to explain. All right, so let me do this. This is what I wanted to do. So like if I see a stock moving like this, I'm definitely, I'm definitely using a trend line. And remember, the trend's your friend. Now, if I see a stock go up here and break here, now this is what I like to see when I'm gonna go long. You see, it's like right above the line, and here I might have, if I saw the volume strong here, I might have taken a long risking this. So now let's say I would have done that. Okay, so I know on my clear risk level is 207. Maybe I risk $2 as a whole number, and I see here gapping up, but once I start seeing this kind of fading and dipping low, I'm selling. I'm saying, okay. And, because you could see this and it looks like there's a flag forming, but, it really was weakness. So here, I would have sold right in here, and then I would have shorted right into this pop, and then you kind of got another move up, and, kind of held, and it's holding, but it's not moving. And you see, look, it kind of then breaks above it, and then it kind of gaps up, but it never gets above that 50%. You see how the 50%, it doesn't even get there, and it's kind of holding below. And does it break below it? I don't know. I'm just looking, and it says kind of sideways. And these are the stocks you obviously don't want to trade because they're just flat. But just to tell you that it's not a perfect science, but if you look at a lot of the stocks, a lot of the times, and I'm just trying to find some stuff with some volume. All these bullshit stocks. Give me 1 second, guys. Let me filter by volume. Maybe you can find some stocks. All right, we talked about DPW already. All right, let's look at FCX. I didn't see what FCX did. Okay, so let's see FCX. So this is a stock now, all right, that if I was to set my fib levels for tomorrow. Now these are already automatically set, but this is what I would do, right? I'm looking for the low. So the low here is 1381. So this is how you would do it. You would go here, okay? You would go to drawings, and you're gonna go to tools, and you're gonna see Fibonacci retracements, and you're gonna look at that 1381, and then you're gonna scroll to your right and just go all the way to the highest point. Sorry guys, and then 1493 is the highest point. So, and I think I had the low was, I think I was off by a number, 1381. So let me make sure that it says 1381 because it has to be exact. Yeah, so 1381 too, in order for it to be the most accurate. So here we go. So what I'd be looking for, all right, and if you notice, the stock blew past the 60, blew past the 51. So these are, and if you see this flag pattern, oops, it's gonna have a push. And if you can notice it here, so the stock kind of gaps up, pulls back, and it's in this upward trend because look, it pulls back, bounces right off the 38, and look, it caps up, pulls back, it kind of dips below it, getting closer to VWAP, gaps up, and it holds here, and you notice it keeps tapping that 38 level, which is 1450. Okay, low here 1450, low 1451, 1449, 1450, 1448, 1450, 1451, and then look, it goes. So when it's holding, when it's up at this level, that it's in a bullish trend and it's going to continue on up. And if you look at the 15-minute, look, gaps up, pulls back, it holds. Look at that, it touches. Look how many times it touches that 23% level before it continued on its way up. And it had this upward trend. It broke above the 23 and it just kept going, pretty much all day long. Pulls back, and for a few seconds it dipped below the 23% mark, but once it gets above that, look at that, it just holds that all day, and then it just kind of held, it never got back to it, and it just kind of held, and you can see it's on this upward trend, and kind of picked up steam, and now it's at 1495. So what you would be looking for tomorrow to see it hopefully retrace back. Now what you like to do is, me personally, when they're up this way, I keep more. Now the automatic fibs will set the 38 and 50 and 61 as this continues to go up. But let's say tomorrow pre-market this is over 15, then you gotta go to edit properties, and then you gotta keep moving it as it goes higher. That's the only downside you like. Now The way around this is the extensions. They have Fibonacci extensions, which I don't really know too much about the extensions, but there's extensions past 100, past 0 apparently. But that's how I've been playing them, guys, and they've been very, very helpful for me. Let's look at MRS. Let's see if anything here. Look at this. Market opens, pulls right back to the 38, and it bounces off that, has a run. Look at that. Pulls right back, holds that 38 line. Look at that. So this is the 38 is 731, and you can see the low. It's it's hovering that area. Now what you can do is if you see it breaks below it, that 731 area, you could take a quick short. Now it doesn't seem like much, but this gets to a low of 715. So if you shorted this at 731, and you cover at let's say 720, you made 15 cents. Doesn't 15 cents can be a lot, could be a little. Me, I like to trade in 1,000 share blocks, so that's a quick 150. Obviously you want big moves, but I'm just trying to show you that you can find some entries on this, and you can see how, look at this, it breaks above the 38, okay, but look, the 23 is acting as resistance. It can't hold that. So once you see it kind of go back down, you got to be careful, because when it's in this range, it's in a bullish trend, so you want to be careful. If the stock has news, good news or good earnings or whatever, then you sometimes when it's in this trend, you can expect that it may pull back to the 38, 50 or 61 and continue on up, and you see it held at 38 pretty much all day until it broke above it, and it just ran all the way up to $8. So if you see that sideways consolidation and it's holding, look, it never breaks below that 731. Look at that, it's just riding it. And look, on the 5-minute time frame, this is a 5-minute time frame, look at that, pulls up, pulls back right to around, okay, the number, and this actually got up to about 890. So let me see, do I have it set correctly? Looks like I'm off a little bit. Oh yeah, this is the high is 890, so I have it wrong. That's why it looked off. I was like, it looks a little off. Here we go. Sorry about that, guys. You see, it has to be set correct. Now let me zoom back out. So I hope this is making sense. And you can see, here it goes. Yeah. So here it goes. This gaps up, pulls back. Look at that. Now look at that. So 734 is in. Look at that. It got down to a low. This is the open 737, low 737, 737, 738. Just holding that. For this, in this one instance, it got a little bit below it, and then it breaks below it. Here you could take a quick short, but you gotta be careful, because you're gonna expect it to pop. And look at that, right in this candle, you could have took this long, and it went from 730, and look at that, it tapped 770, 771 plates resistance. And then it came back down to 731. So you could have shorted this here at the 770 mark and covered in here. This is what I would do. Like me personally, had I seen something like this and I see it tap, 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 and then breaking, I'm taking a short, risking it, because I see that it's not getting a lot of volume, right? I see that here's the big green candle, but here's a red candle, a lot of volume. Here, very little buying. And here I see the selling. I'm taking a short, and look, it came back down. But look what happens. It never really breaks below that 734. Look, it touches 735 right here, low 735. And look at that, it's holding it. And then you got the little push up, and this thing ripped. So you could have took a long, risking that 734. And look at this, it breaks above the 38. Held the 38 and continued all the way up to 816. I mean, and you can play these fibs, and then it continued on up all the way up to 890. So, I'm just showing you this, guys, so that you can see, these fibs play. They can be very, very critical. And unfortunately, I can't find the stock right now. Sometimes there's a lot of plays where the stock goes from like a low to a high, and then it retraces, it pulls back literally to that 61% mark, and then I've seen it happen so many times where the stock kind of gaps up, pulls back to 61% retracement, and then continues on up. I would love to have shown you a few of those stocks. Yeah, this is another example of what I love to short. So this is a stock that JetBlue, right? It had a high of 28.80, right? And then look at this. All right, here's a perfect example. Yesterday, what happens? What the stock does? It's had a high of 28.80. So at pre-market, it's running, right? It's running in pre-market. It's pulling back. Look what it did. It retraced all the way back to 50%, and look what it did. It bounced off that 50% retracement and then runs up. These are the plays I play all the time, where a stock is up, it pulls back, it retraces off either the 61.50 or the 38% level, and then you buy the bounce. Because all this is just shorts covering. And look, they cover right here. There's no mistake. This is like, look, 28.22 was the 50% retracement. Look, was the low, 28.21. And then it bounced up all the way from 28.21 to 28.50 before it starts retracing back. Back to, again, yeah, I'm telling you, I see it happen all the time, you know. Another thing I can talk about is the yearly. So if you look at the stock, you take the high and the low over a year, a lot of people will, and I'm trying to look for, let me see if I can find something to kind of give you some perspective. Okay, here's Aeropostale over the year, right? This is the, so you can see, this is the 38, 50, and 61, right? Look what happens. The stock gaps up, it gets to that 50%, it retraces back below the 38, so the trend is over. So now you're waiting for a new trend. Once it breaks the 38, look, it gaps up, pulls back, literally touches that 1339 mark. The low here was what? 1335, and then it rips up, gaps up, pulls back. There's people who just look for swing trades where they're looking for stocks that retrace back to one of these levels, and they take either long or short based on the direction the stock is going. I'm trying to see, let's see if we can find, let's look at Apple. Maybe Apple. All right, look at Apple. Apple has this crazy run, right? Early last year, right? Gaps up, pulls back. It holds these. It holds that 50% retracement level here, and then runs up, right? But look at, right? It breaks above the 61. It gaps up. It pulls back. But look what happens. A lot of people wait for a stock that's up in this area to retrace back either to this 50% level or the 61% level. So let's say you would have got in here for a swing trade. Look, it held this level pretty much, and then it ripped back up from 142 all the way up to where it got up to as high as 164. Look at this. It retraced back to the 32. I'm sorry, it retraced back to the 61. And look at that. Back up again all the way up to 176. And, you know, it's up in this area. What people do is they wait for the stock to retrace back to one of these levels to then take a swing trade long on, you know, and people do that. So you can use the fibs to buy, you know, to get in on retracements. Like, look at AU. This is a stock that gapped up all the way up here at the 50. Look what happens. It retraces back. It holds that 61% line. People take a swing trade, risking, you know, this. They'll say, hey, you know, I'll you know, for slippage purposes, maybe I risk $6 and I'm gonna take a swing long because it's retraced back and I think it's gonna move up. And look at that, got all the way up to 704. Look at that. It got rejected at the 61% mark, and, you know, kind of retraced back down. You know, doesn't get all the way back. This is the 50. It gets back to the 38. Kind of comes back up, and then, you know, it's back down. But right here, look, when it held this, I back up on another trend. So there's people that just literally do that. What they really do is they wait for the stock to gap up, pull, retrace back, so then they can buy on the retracement. You know, and I'm looking at another stock. Here's IMMU. You take the high and the low. Look, IMU market opens, sideways consolidation. Look what happens. It gets rejected here at the 38 level, right? Look at this. It acts like a support level, but you know it's gonna move up because, oops, you see, if you're looking at technicals, remember I always look at technicals. You got that flag, so you know you're gonna get a push, and it's holding VWAP, and then it, you know, once it breaks through, you're up and running. But look what happens. It gets up to a higher day right here. Moves back, it holds VWAP, which is sort of like right near the 32 level, and then you have this next leg up, you know. And look, you can see it clearly. And look on the 15-minute, this is why you got to look at multiple time frames, because if I'm looking at you can't tell so much on the 1 minute, but on the 5 minute and on the 15-minute, you clearly see a flag pattern, and you see those flags, which tells you you're gonna get a push up. You know, here you see it on the 1 minute, that's a flag, so you know you're gonna get another move up. So you know, that's really what I wanted to talk about and show you guys. I'm just showing you, you know, just random stocks, you know, where fibs can really play a role in your entries and exits, you know. So you know, something like this, you see, look, Momo, look at this, gaps up, pulls back, it holds. This is 28.79. This is a 50% retracement area. Look at this, it got to the low of 28.378, and on the next candle, look, it's above that line, and you're getting a push. Look at that, you got a little pullback, but it held higher low, and right in here, let's say you got it in at 23.80, you know, it went all the way high, 24.01, before it pulls back, breaks above it, and keeps going, you know. So you know, and you can see stocks are clearly holding these areas as support and resistance. It's no accident, you know. Fibs are very, very very useful. So I hope you found this somewhat helpful. You know, I'll post it to you know, my YouTube. Just leave questions and comments, and I'll try to answer them as best as possible. So just to, you know, wrap up, and look, just to show you, look, here it goes, right? Look at that, gaps up, it gets rejected here, pulls back. Okay, so you could theoretically take a quick short here if you wanted to. It doesn't seem like much, but at 33, a high of 33.37, it got back to a low of 33.16. You know, you could make where I'm pinning 1,000 share blocks. That's a quick, you know, $100+ but you know, look at how it's holding. Look at this, it gaps up. Look how it just holds this level here, you know, and look at that, it's holding as support. That's telling you that it's moving higher. And if you're using your trend line, you know, you can see how it's going following a trend, you know, each time. Look at that, how it held it here, and look at that, gaps up, pulls back, look, holds the 23 here, you know, and you know, look at that, bounced right off it, continued upward. I'm just showing you guys how incredible Fibonacci can be. So remember, when it's in this upward trend, it's bullish. All right, it's bullish. And look, on the 15-minute, you can see it nice and clear. It's on a bullish trend, you know. You can see it clearly. Look at that, stock here on the yearly gets up to the 32, gets rejected, retraces back literally to about the 50% level, and you could have took a swing off it long. I'm just showing you. All right, now if you don't want to use the automated fibs, remember, you look at the 2-day chart, just see where the high and the low is. So you see, here's the low. Okay, oops. So remember, so in this scenario, you're going from low to high because that's the trend, that's the current trend. And remember, this works best on a 2-day time frame. All right, so make sure you're using a 2-day time frame when you do the Fibonacci. That's the key. That's the key that I've realized, you know, that nobody really wanted to tell me, and nobody teaches you on YouTube. You got to use a 2-day time frame and point the low or the high and the low, depending on where the trend is. So if the stock is gapping up, right, it went from a low to a high, then this is the current trend. Or if it went from a really high extreme to a really low, a new low, then that's the new trend. So, you know, I'm running. So as I'm looking at this, here is after hours, 34.75 is the new high. So that is right now, that's the current trend. Now remember, as it continues to, if it continues to break above higher, you got to keep plotting the Fibonacci higher and higher. But if you use my fibs, automatic fibs, it will retrace, it will set the 30, the 50, and the 61. Now here's a task for you coders out there. What would be fucking awesome is if somebody can figure out a way to have thinkorswim send you an alert every time a stock touches one of these levels. So when the price, like the mark, not the last, but the mark touches one of these levels, it creates an alert and just sends an alert. That would be amazing. If one of you guys can figure that out, I would be, and post it, I would be forever grateful. That I can't figure out. I'm trying to find somebody who can figure that out, where it sends you alerts every time it touches one of these numbers, which would be freaking phenomenal. All right. You know, and you can play around with this. If you want to add the 23 and the 78, you can, you know, to your, when I post a script, you know, you can manipulate it and make it however you want. I don't know how to do that. I had somebody actually send me this automatic Fibonacci retracement, which was super sweet, and you know, very grateful. So I'll share it with you guys. So I hope you found this useful. Again, you know, look at these, look at the charts, you know, practice and see how you can make them work for you for entries to go long and short. You can use it on the yearly, take the highest point and the lowest point over 1 year, and you can, you know, you can actually use Fibonacci for that as well. You can use it also, you know, if you're looking, like another scenario I like to do is I look for stocks that are down for the day. For example, this is MBT, and what I do is if I see a stock that's up and it's on a downward trend, I look to see if it breaks below the 38, which would be, that's 920, and I short it once it breaks below 38, because that tells me that trend, the upward trend is over and that it's on a bearish trend. You know, it doesn't, you know, it's not a guarantee, but that's a little trick that I'll share with you guys. I do it a lot. So I look for stocks that are, again, that are, once they break below that 38, and you can see here it's kind of riding the 38, and look at Fran, it breaks below and it just completely tanks. So, you know, that's another, you know, trick. Like here's another example, HIBB. This is, you know, shitty stock, not a ton of volume, but to tell you that what I would do on a stock, like look at this, it retraces back to 61, bounces back up. I'm telling you, even on shitty stocks with no volume, it works. You know, look at this, it retraces back here, bounces up, continues down. Now what I would do is I would wait to see it break below that 38, and then I take it short. I do that a lot, and let me tell you, I bank. It's a simple strategy, and it works. It works way more than you think. And I'm just trying to look at other, like FINO. This is a stock that's been running, you know, so it gaps up, pulls back, you know, and this is choppy. I normally I wouldn't look at this, but what I look to do is to clearly see a stock break down and break below that 38 on a downward trend where it's below the 13 EMA, and I just take it short. Really nice simple short, and I do that pretty often, and I have a pretty high success rate with it. All right, so I hope you found this helpful. If you have questions, again, let me know. I'm sorry if this was kind of complicated and not super clear. I just kind of winged this. I can do another one if you want me to with more examples. You know, let's get this money. I should be trading in another couple of weeks. All right, so talk to you guys soon.